And we're back. What a wonderful run Bitcoin has provided. Many very happy investors. For the guys who have put their accounts into Bitcoin, there's been some big smiles from them. I mean, from 18,000 to 34,000 in such a short period of time. It's wonderful. Congratulations, guys. I hope you enjoy your profits. Make sure to sell out at the right time. But that's not what this video is about, right? This video is about time projection. A very, very, very powerful tool. And the second tool within the MTOPS setup. Now, if you look at the bottom here, 21 December, 28 December, 4th of January, a lot of guys tend to ignore this poor area at the bottom. And they over-focus at the area on the side. So they underestimate what time does for charting and for trading, and overestimate what price does. So it's super important to take the entire picture into consideration when moving forward and making profits. So let's get into time projection. The first type of forecasting will look at the likely time of the next turning points coming up. You'll understand in a sec as to why that is so important. Actually, let me hold on before we go on. Timing is crucial to the mental well-being of traders, to the emotional well-being of traders, to the self-discipline well-being of traders. Getting in too soon, jumping out because your anxiety has kicked in, so getting out too soon is prime suspect to losses. So this mastering time projection in itself is going to absolutely change the way you either trade if you are a trader, or it's going to put so much power into your hands if this is your first time learning about trading and how things work. So pay special attention to this. The key thing to remember when doing this is that highs forecast highs and lows forecast lows. So we simply measure, this is the application, so we simply measure the distance between the two turning points to get an estimate of the base vibration for waves then projected forward. So this quantum level speaking is to do with the deep research that I facilitated over the last 3 years. Basically what it's saying is that, let's go to the full screen now. If you remember in the last video, we covered turning points. And there will be 10 turning points per cycle, roughly 2.5 turning points per quadrant. And within that, we get to now project the future utilizing the time projection tool. Okay, so I'm just going to remove these market indicating lines for now, as we can see quite clearly that Bitcoin went absolutely to the moon. So say for example, we are now calculating the next top turning point. Okay, so we've gone from 10, then to 1, then to 2, then to 3, then to 4, then to 5, then to 6, then to 7, then to 8, then to 9, and we completed 10-point cycles. So this particular week, as glorious as it looks on this way up, would have been particularly difficult because of the blimp-like price action, which may have thrown many other traders off. So say for example over here, traders probably would have thought that the market is exhausted. So they would have gone short, which means to go down, and then bang, the price would have gone up and they would have cried. So a moment of silence for them. Cool. Let's move on. So here, what we're going to do is we're going to look for the date and time measuring tool. You'll find this along the left-hand panel right here. Okay, so once again, to feed our favorites bar, we're going to put a little star next to it and select it. To give you a quick demonstration, between 5 and 7 will roughly give us the distance of where the next turning point is going to be. I hope that seems pretty magical to you right now. What could make it even more magical is if we clean up this tool. So I'm going to double click on the line itself and it brings up the settings. You can also right click, go to settings, and we're going to make it a little easier to read. So I'm turning personally my line black. I'd recommend you do the same. Take away this unnecessary border, and what we have there looks pretty good to me. Barring the fact that we have all this useless information, let's take that away for now. So now that we have this, I'm pretty sure you can see that the distance between 5 and 7, so number 5 turning point and number 7 turning point, if we start the line at number 7, showed us here where this turning point was going to be. Now let's do that again. So the measure between 7 and 9, this time I'm going to clone it. That's basically copy and paste. I'm going to put it side to side. And we look for the confluence of where the turning point of this may have been. Now, this is a component of the MTOPS setup. So more often than not, you're going to get a really good result. But because the market tends to overshoot and at times gets a little bit confusing with what it wants to do next, there might be some provisions that we need to make to ensure higher accuracy. And more on that later. We utilize a backup tool called the Sine Waves, which I'll get into in a bit. But for now, we see over here that this was a tricky one. What we're finding, by the way, is that on Mondays, there seems to be a trend directional change and then a bullish movement, trend directional change, bullish movement. I've just, out of interest, noticed that most Mondays of late during this bull run. So for me, I don't see a lot of great confluence over here. I'm going to try and find something to illustrate what I'm seeing for you. Normally there's nice little arrows that give us an indication of what guys are looking at. We can utilize that, but it's a bit bulky. I suppose for the exercise, why not? Okay, so ideally, this would have fallen there, or alternatively up here. Now, this is where the exception to the rule comes in. Right? So what am I talking about here? I'm a little bit going all over the show just because of the real life example that we're looking at here, which should also be quite advantageous to you because we get to see the abnormalities and then the clear confluence moves as well. So with the time projection tool, we measure the previous high to the current high and clone that across. Ideally, we will see it fall on the 100% mark. Another word of saying 100% is one full length or a complete measure. But because I like to work with numbers, I'm going to say 100%. So it will land generally either on the 100% mark or alternatively on the 50% mark. I'm sure that makes sense to you guys, right? There's your full length, there's your half length, 100%, 50%, okay? And it'll keep on going upwards. So over here, a very rare thing happened, and that is it fell on the 75% mark. So in certain extreme market conditions, what can tend to happen is that it will land on a 25% increment instead of a 50% increment. And in case you don't understand what an increment is, an increment goes up by a set amount. In this case, it's 50%, 100%, 150%, and 200%. So in this rare occasion, we got it on the 50% line. But don't worry about that because abnormalities will be narrowed down with further tools. So let's mark that off as 1. I'll do it as quickly as I can so that I don't lose your attention, because sometimes marking turning points can be a bit tedious. Okay, so now we go down and do the exact same thing to forecast the bottom. So I'm actually going to delete these. Let me just get fresh ones. There we go. Favorite tools go from 8, turning point 8, to turning point 9. Right click, clone, copy and paste in other words. And then once again, we're going to put them side by side to see where it happens. And as you can see, right here before your very eyes, the magic of MTOPS. On the 50% line, we now have turning point 2. Now guys, if you're anything like me, when I came across this information, I wanted to dance on tables. This is magic, powerful, incredible stuff. And why do I feel that way? Well, if you look at where we are finding the turning points based on the time projection tool alone, let alone all the other tools you're about to learn, you'll be able to find one of the ideal entry points to get into your position and then to get out at a profit. So if you saw that your turning point 2 was going to happen here, this, in other words, your bottom or your resistance or your floor, whatever works for you, I'm just going to call it turning point 2 because that's what it is in my world. So we get into this great entry point. You'll put your order in, price will go up, and then you'll sell out and take that profit. Once again, you wait for it to come down and take that profit. So I hope you're paying attention, but more so, I hope you are super excited by what you've just found out right here, because this alone, plus everything you've already learned, which I'm assuming that you've been diligent and understood market structure and cycles and so on, and the rule of alternation, very important, is going to make you more profitable than most other traders out there. So welcome to your new life. All right, so going back to it, that's one full measure, that's 50%, that's 100%, but because we are in an uptrend, the nature of the down moves will be shorter than the nature of the up moves. And there it is, slap bang on the 50%. All right, so what do we do next? Ask yourself that question. And I hope the answer is measure the previous high and the current high. Right click, clone, and clone. We're now looking for turning point 3. So because this landed on a 75%, the measure is a little bit off. So what will happen from here is that the market will want to correct the abnormalities. So again, this high would fit on the 75% line. Let me stand corrected. So this measuring tool begins at the current top. So this measure we can almost just completely take away, and I often do. I delete it. So this starts over here, so this becomes 0%. Just follow me with this. 50%, 100%, okay, 150%, and 200%. That's one full measure, that's second full measure, that's a third full measure. One full measure at 100%. Now, because we're beginning from there, that's 100%, and then that's the second one, so 200%. So in this particular instance, it fell on the 75 once again, and that's okay. Again, we've got further tools to hone in on where it will precisely land in the future, and from there, make our decisions. Now, I'm going to remove these and put down the next turning point high. So just very quickly to recap, why is this a high? This is a high because it's higher than the last, and because we're on another quadrant, your 1, 2, 3 turning points says that it's unlikely to have a fourth turning point within this quadrant. Remember, 10 divided by 4 is 2.5 turning points, so we're going to now have turning point 3 form here in quadrant 2. I hope I'm not losing you guys. Please come to me with any questions if you do have. So here is, just out of interest, our confirmation is higher, higher, and higher low. I mean higher, higher, and higher, high. This is confirmation that we are in an uptrend, which will also better help us ascertain our time projection, as because of the nature of an uptrend, if you have a look at just the lines in itself, trying to find where I can remove that. The lines in itself will show you that it's an uptrend. This upward line is longer than this downward line. This upward gold line will be longer than the purple down line. So that in itself will help us ascertain where price will fall next. So that is another way that we can utilize a backup structure to further support the time projection tool. So let's move this out of the way for now. So 3. To calculate 4, what do? We measure the distance from the previous low to the current low, and then clone it. So what you're seeing here is a very tight cloning, measuring tool of the bottom. So what I'm just doing is I'm building it out. And it seems to be that this is the low point. So it seems that this vigorous market has been a little bit turbulent in its swings. And when there are extreme moves, for example, where Bitcoin is right now, these radical wicks can push things out. Ideally, without this radical wick, this would have been the low. But because perhaps some whale has gone into the market with a big order, he overshot the limit orders with a market order and pull the price down erratically. So we utilize the price projection tool to clean up the crazy moves of the market of digital currencies. So Bitcoin, being computer-based, can have a bit of mess. Most of Forex traders understand this as well, and the price tends to overshoot itself at times. So with experience, you'll ascertain where the price won't be. And also with the community input of the MTOPS program, you'll ascertain that as well. So now we're going to go from 3 to 4. We're going to ignore this. So I'm really glad you're seeing this, guys, because these are the abnormalities that you're going to experience in trading yourself. So the fact that you've seen it over here will help you get clarity and confidence and calm within yourself to be like, okay, I've seen this before. It's not a problem. Let's tackle it in this way. So this will be turning point 4. Ask yourself, why is it turning point 4? Well, we measured the distance between 10 and 2. That's 100%. That's 200%. And that's 250%. You'll notice that the smaller distances will attract more clones, if you want to call it that, more projections, and the longer distances will attract less. So with experience and the support of the MTOPS community and group, you'll be able to discern which one to pay attention to. So for now, I hope you get the gist of what we're doing. I'm going to do one more before we get back to the notes, because I think the notes will recover a lot of what I've already explained. Okay, so now for a longer up, I'm going to go from 1 to 3. I'm going to clone that, bring that across. I'm going to actually bring it a little bit further up. Make sure that's in line. There we go. And then again, take away the first initial measurement and use that as a clone. Okay. So once again, and I need to keep on stressing this because sometimes you will have massive bull runs where price will go between 18,000 and 34,000 in a matter of weeks. Now, if you've been trading Bitcoin for the last 3 years, it doesn't happen that often, okay? So this is pretty unique circumstances. So if you come into this environment, be mindful to look for any irradical behavior within the time projection movements, especially in extreme market moves. Generally, in a more stable market condition where there isn't these major runs of $1,000 at a time, you will find that the price does typically land at the 50% or the 100%. So once again here, we found it at a 25% increment. So it's 50%, 100%, and fell at the 125%. So let's go from 4 to 5 and mark that as our 5. Alright guys, I'm going to leave it there for now because the notes should rehash what we've been seeing. And I'm really glad you got to see this happen live, as you're now equipped to handle the abnormalities that may happen in live trading, because it can be a bit daunting sometimes when you're on your own and you see something out of range and you go, well, I don't know what to do here. It's meant to land on a 50% increment, but it's landed on the 25% increment instead. These are the reasons why. Okay, so let's get back to it. Pause now if you want to go have a cup of coffee or take a little walk, as sometimes that refreshes the brain. Okay, so as you've seen, we've drawn this measurement on the chart using the modified date and price range tool. I first constructed a horizontal line between the tops or the bottoms, then cloned it and moved that clone forward in time, as you saw. I chose to modify the date and price range tool as it has a line in the middle which we'll use as a halfway point known as the 50% level. So that's that over there. Keep the highs and lows separate, super important. I'll actually make this bold. Keep the highs and the lows separate as they represent different resonance. So the resonance between 9 and 1 will be different to the resonance between 10 and 2. So when you're measuring, be sure to keep them separate on your chart. As I've seen guys go, all right, cool, let's measure 2 and 4. And they go up to here and they go 2 and 4. And they clone it and they move it forward. And then they get confused because they're like, oh, wait, hold on. I don't know what's going to happen now because price is showing me that there's something happening up here. Now there's something happening up here. No, keep it simple. Separate the two. The resonance between these two highs and these two lows are different. And just on resonance for a second, all of this has been derived from quantum science, mass consciousness, the unified field. So it's based on natural laws. And the exhaustion point at this point on 21st of December here at 5:30, and the exhaustion point at this point on the 23rd of December at 8 o'clock in the morning have got relevance to what the world, or let me say the world, the traders of the Bitcoin world rather, are feeling at that time. So it has an exhaustion point, that's an exhaustion point. They allow it to go down a bit, turns off to another exhaustion point. So this is all energy based. So keep the highs and the lows separate from one another, okay? So let's talk about the 50% levels once again. I just want to drive this point home. Guys, if you want to pause now, that's okay, but all of this information is really important to drive in. As monotonous as it can be, I've worked with students who I've had to go back and teach this to them 7 times over and over again. And that's because when you're on the market with the markets on your own, it's sometimes easy to get overwhelmed. And that overwhelmed feeling creates confusion, and it's not a good thing. So let's get into this a little bit further. As M-TOPS is based on natural law, we're working with energy resonance. The 50% level is a critical piece of information when forecasting time. So we work in 50% increments. With time resonance lines, we watch for increments of 50% to narrow down the next turning point position. 50% represents the midway level. So there we go. And 100% represents the full resonance level. Time resonance is influenced by market sentiment, which is market energy of what everyone's feeling around the world, if it's FUD or if it's excitement, and the higher time cycles, which we'll get into later on in the course. It can happen that the initial resonance line can end up repeating more than one time. And as you saw here, it was 1, 2, 3, and a half. That means we look at potential turning points at 50%, 100%, 150%, 200%, and 250%. Anything above the 300% level is really out of the ordinary, and something we'll use the higher time frames to confirm. So as I said, there needs to be 2.5 turning points, roughly. Doesn't need to be, but it's roughly 2.5 turning points per quadrant. So if you start to see your time projection tool exceeding 350%, so let's see what that looks like. That's 1, that's 2. Actually, let's use this as a live example. So you'll see here, because of the quadrant, that 50%, 100%, 150%, and 200% will be the max, because you're not going to get 0.5 in a further quadrant, because again, we get 2.5 turning points per quadrant. So you're not going to see a 250%, you're not going to see a 300%. So when you start seeing 400%, 500%, guys, just know that there's something wrong. Come to us in the group with your work and we can guide you from there. You will notice that the 50% levels become more powerful with longer measurements and less powerful with shorter measurements. Okay, so if there is a shorter measurement because of the shorter turning points, we will begin to see that the focus will be more on the 100%. There's 100%. The 100% than the 50%. This will become obvious with practice. Sometimes a move on the 50% level will give us a clue that the trend is about to turn. To which timing level the market moves not only provides timing information for that particular point, it also provides critical information about the health of the trend and what the market structure is setting out to do next. So I don't want to get into it too much right now, guys, but we can utilize the 50%, 100%, 150%, 200% lines to depict trend as well. So you'll see in the future as MTOPS comes together that everything coincides with one another. So the time projection tool will give us an indication of what the market direction wants to do, and the market direction can give us an indication of what the time projection tool wants to do. They work in synchronicity. So keeping it simple. As we spoke about earlier in the course, markets tend to overshoot, as you can see by this little example over here, when forming the next turning point. The time projection alone isn't going to be accurate to the bar. As you've seen, we've had to make a few provisions given on the market conditions. So even though the resonance lines will offer impressive accuracy, remember to allow some leeway. And that's what the MTOPS community is about, guys. If you're looking to have a second opinion or to get your idea shared with guys who understand what you're doing, the group is there for you to do exactly that. So go to your share camera, copy the URL, go to the group, copy, paste it, and ask, what do you guys think about this turning point? What do you guys think about this market uptrend? And together as a team, we'll provide the information that we all need to make this thing an absolute high accuracy success. Practically speaking, I prefer having a tool that gives only one or two projections consistently and reliably, but with only good accuracy, compared to a tool that provides too many projections. So the reason why I have this particular tool with 0, 50, and 100% instead of 0, 25%, 50%, 75%, 100% is that the more lines you add to a tool, the less value they have. Now I want you to sink that information to sink in, because that was a big realization for me. The more you have, the less value each one has. So that is, yeah, I don't know if you need a moment for it to really resonate, because the simplicity of MTOPS is there to be functional for each person to utilize this to its maximum and to utilize it practically every single day, and also to have a high accuracy response on relatively minimal work, in comparison to all these other guys who get lost in this maze of confusion and adding a whole bunch of extra light shows and all that kind of stuff. So this, although it's simple, which is purposely made to be simple, it's also super, super powerful. It's also based on quantum science and mass consciousness and the human subconscious need for some symmetrical landing or symmetry. So utilize it practically, but also understand its power. And for example, you could split this tool into 25% increments instead of 50% increments, but that would double your potential of turning possibilities. That's too many to be practically useful. So just bask in the fact that we've really thought of everything here and utilize this to its full potential. The more possibilities you have, the less value each possibility has. Okay? So simple, clear, concise, with the idea, with at the back of our minds, that we have to allow for some leeway at times, depending on what the market wants. Simplicity is better. Okay, so what if the 50% level is not practically viable? Then what? Just split the level in half to get the 25% market target instead. Generally speaking, keeping it simple is still to be preferred. So I think I've repeated myself 4 or 5 times on the same points, but here's hoping that information is starting to really sink in. So now, when things get a little bit tricky, we have a backup tool that will give us an indication of the likelihood of where turning points will be from a time perspective. And that is our good friend, the Sine Wave tool. This is bonus information that I was going to keep for the super advanced course, but because I know you're smart, I'm going to give it to you as well here. So what I'm doing, if you saw, I went to the Sine Wave. Let's add that to our favorites bar, add that star. I'm putting down the sine wave so that we have 4 waves. So we got that, and counting that as 1 wave, 1 hill if you want to call it that, 2 waves or 2 hills if you want to call it that, 3 waves, and 4 waves within each quadrant. So many guys have studied this for years. Basically, the astrophysics traders will tell you that it coincides with the momentum of the moon, especially on the 28 day cycle. For example, February is the cleanest numerological month that coincides with the magic number of 4. So 4 times 7 is 28. It's a very clean month. I'm not sure why they messed up the other months, but if you utilize that thinking, there will be a certain amount of high tides and low tides or transitions around the planet during that time. So astrophysicists tie this to the lunar movements, but I take it down to, if you split this quadrant into 4, which I'll cover into the higher time frames, you'll see that the time frame below this, which will be the 8 minutes, and we'll get into that for our day traders later on, will turn even this cycle into a 10 turning point up and down. So very roughly, without practicing it, this 9 will go from 9 to 10. This will go from 10 to 1. Oh, how did that happen? One to 2, and so on. 2 to 3, because there will be a quadrant, a cycle that happens on the lower time frame. And that's what I've been talking about when it comes to this being applicable to all time frames, across all markets, across all appetites of guys who want to trade. So now you've got your quadrants there, and here we go. 10, 1, 2, 3, 4, 5, 6, and so on. So why this sine wave works is because it coincides with the turning points on the lower time frame. And therefore we utilize it in line with the time projection tool to see where the likely turning points would be on the lower time frame. Again, guys, if you understand what I'm saying here, take a moment to bask in how incredible these findings are. This alone, once again, is super powerful stuff. Once you get to understand this and you see it in action, it's super powerful stuff. Now let's have a look at what it looks like in terms of the lower frames with the sine wave. So this one is in line with that. So let's see if there's a smaller line, because I think again it's a bit overbearing when it gets further down. Let's try an arrow. Now if you're looking at 10, I would say 10 doesn't line up as wonderful as you want it to. So let's continue. See the highs here. So there we go. See that sine wave lining up with 3. And again, that sine wave lining up with 5. And the same thing would happen if you just duplicate it underneath. As well. So that's 2. And that's 4. Okay. So using a sine wave as a second confirmation. Earlier on the course, we touched on the sine wave. The sine wave is used as a second confirmation for time. We use the sine wave to subdivide cycles into 16 parts, and I just explained as to why. Because within this cycle of 4 quadrants, that one quadrant has got a cycle of 4 quadrants, and so on. Cycles are governed by the number 4, and the sine wave gives a peak on the lower time cycle and its likely turning point. The power of mTOPS exists when we use everything together. You'll get more accurate with some of the other tools once we start merging them together as one. So right now we've only done market structure and time. There's still more to come with even closer accuracy. If you're feeling uncertain about your time forecasting, you can also use market structure and our knowledge of where the points ought to form to filter out unlikely scenarios. So again, higher highs and higher lows will show you an uptrend will have longer highs and a downtrend will have longer lows. And the turning points can also help with the market structure as well. Filtering out what is unlikely to happen is as powerful as forecasting what might. I have to read that again. Sorry. These videos take it out of you. Like, they're really exhausting and long. But again, the guys, like, just look beyond the tired voice or the jumping from here to there and the way I explain things. It's about the content. It's about driving home how this is done, which is most important. So if the videos are suboptimal, that's okay. This is my first version of them. I'm going to get videographers to help vet them in the future. So thanks very much for dealing with my brain that gets progressively tired through the explanation as we go. So again, filtering out what is unlikely to happen is as powerful as forecasting what might happen. So taking away what's not going to happen, honing in what's not going to happen, is as powerful as identifying what will. So I look forward to showing you guys more of how we're able to do that in the following tools to come. Until then, take a break, revise what you've seen. As always, go to your camera, copy your chart, send it across to me on Telegram, and let's progress us into the next realm of trading together. That's it for now, guys. Ciao.